Hello, savvy investors and curious minds. Welcome to our channel. Today, we're going on an exciting journey, exploring the fascinating realms of stocks and cryptocurrencies. We'll delve into their differences, their similarities, and how they might fit into your investment strategy. But remember, we're not financial advisors. This video is for educational purposes, and it's crucial that you conduct your own research before making any investment decisions. So sit back, relax, and let's dive into the world of investing. First up, let's tackle the traditional player in the investment game, stocks. Stocks, also known as shares or equities, represent ownership in a company. When you buy a stock, you're essentially purchasing a piece of that company, becoming a shareholder. As the company grows and prospers, so does your investment, allowing you to share in the company's success. But how do stocks work? Well, companies issue stocks to raise capital for various reasons, such as expansion, paying off debt, or launching new products. Stocks are bought and sold on exchanges like the New York Stock Exchange or the NASDAQ, where their prices fluctuate throughout the trading day. These prices are influenced by several factors, including supply and demand, economic indicators, and the company's performance. Now, owning stocks comes with its benefits. One of the main ones is the potential for capital gains. If the company does well, the price of the stock increases, and you can sell your shares for a profit. Another benefit is dividends. Some companies distribute a portion of their earnings to shareholders in the form of dividends, providing a steady income stream. However, just as there are benefits, there are also risks involved in owning stocks. The price of a stock can decrease due to poor company performance or unfavorable market conditions, leading to potential losses. Additionally, not all companies pay dividends, and those that do can choose to stop at any time. Moreover, the value of a stock is often tied to the perceived future earnings of the company. If these expectations change, it can significantly impact the stock's price. For instance, news about changes in management, product releases, or shifts in the economy can cause stock prices to rise or fall. Despite these risks, stocks have proven to be a valuable investment tool. They offer the potential for significant returns and are a great way to build wealth over time. It's important to remember, though, that successful stock investing requires research, understanding, and patience. Stocks have been around for centuries, and they've proven to be a reliable investment vehicle. Now let's turn our attention to cryptocurrencies. Cryptocurrencies are digital or virtual currencies secured by cryptography, making them nearly impossible to counterfeit or double spend. They are decentralized and operate on technology known as blockchain, a distributed ledger enforced by a network of computers called nodes. This decentralization aspect makes them immune to government interference or manipulation. One of the most well-known cryptocurrencies is Bitcoin, launched in 2009. It introduced the concept of cryptocurrencies to the world, and since then, we've seen the emergence of thousands of different cryptocurrencies, each with their own unique features and uses. Cryptocurrencies work through a technology called blockchain. Blockchain is a decentralized technology spread across many computers that manage and record transactions. Its decentralized nature ensures security, transparency, and immutability. There are several benefits to cryptocurrencies. They offer the promise of lower transaction fees than traditional online payment mechanisms, and unlike government-issued currencies, they are operated by decentralized authority. Cryptocurrencies can also be easier to move and exchange than physical assets like gold or real estate. But like any investment, they come with their risks. The anonymity of transactions means they have been linked to illegal activities. Their value can be highly volatile, and there is also the risk of them being replaced by newer, more advanced cryptocurrencies. Cryptocurrency prices are influenced by numerous factors, including technological advancements, regulatory developments, market demand, and macroeconomic trends. It's important to note that due to its relative infancy and volatility, investing in cryptocurrencies can be very risky. Another crucial concept in the world of cryptocurrencies is mining. Mining is a process where powerful computers perform complex calculations to validate transactions and add them to the blockchain. As a reward, miners may receive newly created cryptocurrencies, hence the term mining. Cryptocurrencies are still in their infancy, and they are proving to be a highly volatile but potentially lucrative investment. Now that we've covered the basics, it's time to compare and contrast stocks and cryptocurrencies. Let's start with risk. Both stocks and cryptocurrencies come with their own unique risks. With stocks, you're investing in a company, and the company's success or failure directly impacts the value of your investment. This means your investment is subject to market fluctuations, economic downturns, and company-specific risks like poor management or a major scandal. Cryptocurrencies, on the other hand, are decentralized and largely unregulated. This means they can be extremely volatile, with prices that can skyrocket or plummet dramatically in very short periods of time. Additionally, the lack of regulation can make cryptocurrencies more susceptible to fraud and cybercrime. Next, let's look at potential returns. Stocks have a long history of providing steady, albeit sometimes slow, growth over time. They're a tried and true part of many long-term investment strategies, and while they may not always offer the most exciting returns, they do offer a level of stability and predictability. Cryptocurrencies, however, are much newer and less predictable. While this means they have the potential for massive returns, they also come with a much higher level of risk. Remember, high reward often comes with high risk. Now, let's talk about accessibility. Stocks have been around for centuries, and the process of buying and selling stocks is well established. You can purchase stocks through a brokerage, and you have the protection of regulatory bodies like the Securities and Exchange Commission. Cryptocurrencies, however, are a bit of a different beast. While they're becoming more mainstream, they're still not as widely accepted or understood. To invest in cryptocurrency, you'll need to set up a digital wallet and purchase your crypto through a crypto exchange. And remember, the regulatory environment for cryptocurrencies is much less established than it is for stocks. Finally, let's discuss the regulatory environment. When you invest in stocks, you're dealing with a heavily regulated market. This provides a certain level of protection, as there are rules and regulations in place to protect investors. Cryptocurrencies, however, operate in a largely unregulated market. While this can provide more freedom and potential for innovation, it also means there's less protection for investors. It's a bit of a wild west out there in the crypto world, so you'll need to be prepared to do your due diligence and navigate this landscape carefully. As you can see, both stocks and cryptocurrencies have their own unique features and challenges. Whether you choose to invest in stocks, cryptocurrencies, or a mix of both, it's important to understand what you're getting into. Always do your research, understand the risks, and make informed decisions. Remember, we're not financial advisors, and it's crucial to do your own research before making any investment decisions. So, what have we learned today? In the grand scheme of things, stocks and cryptocurrencies are two very different beasts. Each has its own unique qualities, opportunities, and challenges. Stocks, the stalwarts of traditional investing, represent ownership in a company. They are time-tested and regulated with a history that goes back centuries. When you invest in stocks, you're buying a piece of a company, a share in their success or failure. You're placing your trust in the company's leadership, its business model, and its future prospects. On the other side of the coin, we have cryptocurrencies, the digital disruptors. Cryptocurrencies are decentralized, digital assets that use cryptography for security. They are often hailed as the future of finance, with blockchain technology at their core. Investing in cryptocurrencies can feel like stepping into a brave new world, one filled with promise but also with uncertainty. When comparing the two, it's like comparing apples and oranges. Stocks offer dividends and voting rights, while cryptocurrencies offer anonymity and freedom from traditional banking systems. Stocks are influenced by a company's performance and the overall economy, while cryptocurrencies are largely driven by supply and demand dynamics. But here's the kicker. Whether you choose to invest in stocks or cryptocurrencies, the golden rule remains the same. Do your own research. Understand what you're investing in. Know the risks associated with your investment. Don't just follow the hype. Financial literacy is a journey, not a destination. The more you learn, the more equipped you'll be to navigate the complex world of investing, so don't stop here. Continue expanding your knowledge, continue asking questions, and continue exploring the vast universe of investing. Remember, we're not financial advisors. We're here to provide information and inspire discussions. Your money, your decision, treat it with the respect it deserves. And with that, we've reached the end of our journey today. It's been a pleasure to delve into the world of stocks and cryptocurrencies with you. We hope you found this exploration both enlightening and engaging. Thanks for watching, folks. Be sure to like, comment, and subscribe. And don't forget to hit the bell notification so you'll get updates anytime we upload a new video. Until next time, keep investing and keep learning.